Hey guys, it's Kilby Browne
and Marizete Browne,
and we are the Property Hats New York City Team. So thanks so much for joining us on our live Facebook site, on our podcast. We have a very, very exciting guest who's a seasoned New York City and across the country mortgage loan officer. It's our friend Stephan. Stephan, before Marizete picks this up, I just wanted to say one of the main reasons why we contacted you is we know at heart that you're an educator, you're a teacher, and you work so well with first-time buyers. So welcome aboard. Thanks for coming on our show.
Thank you so much, Stephan.
Yeah, no, thank you both for having me.
Of course. So
Great
let's
to be
just
here.
start with what's happening today. So what are the latest trends?
Actually, you know what?
What? No?
Just give us 30 seconds about yourself, Stephan,
Okay.
before we get into
You want
it.
a quick spiel?
Yeah, just
Okay,
a
sure.
quick
So-
30 seconds.
Let us know about you a little bit.
Yeah, so I'm a residential loan officer. I've been in the business now going on 15, almost 16 years. And I've worked as a mortgage broker and also as for big money centered banks. So I'm well versed in the different parts of the industry. Happen to be licensed in all 50 states. I do loans in all 50 states, but my primary focus is New York City. And, you know, I'm a co-op and condo, New York City jumbo expert. That's primarily what I do, but happy to help anyone who needs help with the mortgage, certainly. And as you mentioned, I really, this is the fun part of my job, right? Educating people, talking to people, helping them understand mortgages. This is what I wish I could just get paid to do that, but unfortunately, that's not a good thing. I got to close some deals.
Exactly. One of the differences, obviously, we're not going to get into it right now, but if someone reached out to you to explain it, there's a big difference between just buying a single family home in another state and a condo and co-op in New York City. There's a huge difference, and that's where a specialist like you comes in.
Absolutely. Yeah, no, just like I think it's critical that they work with a real estate agent like you two that specialize in New York City collateral. Same thing applies to your whole team, right? The lender you're working with, the real estate attorney, it's critical that they understand, obviously, co-ops and condos, because you know it's so much different than the burbs. And I feel fortunate. You know, I think it's true what they say. You know, if you can make it in New York, you can really make it anywhere.
Absolutely, right? Yes. So let's start. So given, you know, the current situation, what are the latest trends with mortgage, with this pandemic that is going on now?
Yeah, absolutely. There's good news and there's bad news. Let's start with the good news. The good news is that there are banks that are still lending. We still have transactions that are closing. I just had a co-op closing yesterday. I have another co-op closing coming up later this week. Actually, I have my first mail away closing, right? And
Yes.
that's part of the good news. You know, normally New York City, as you know, closings in New York are a sit down closing, right? Everybody has to come to the closing. The buyers, the sellers, their attorneys, the transfer agents, the title rep, the payoff attorney, the bank attorney, right? So many people in a room. But obviously, because of social distancing and trying to accommodate what's happening, closings are changing. You know, they're shifting, and they're allowing, you know, people are obviously, things need to be wet signed, but they're able to send them via messenger or FedEx, and they're, you know, the borrowers are meeting with a notary, obviously just those two. Or obviously New York State announced that they're allowing also remote online notaries, where a notary can actually witness a signature over a video chat, just like this. Obviously, there's more compliance and complexities with that, and a lot of bank attorneys are trying to avoid that if possible, because a lot is extra. Like, for example, the video of the signing has to be saved with the loan, you know, like as proof in the future that they actually signed, which seems kind of silly, but that's one of those requirements. So they're trying to avoid. Other good news is that with regards to appraisals, right? A lot of times, normally to get a mortgage, someone needs to have an appraiser show up in the apartment, inspect the apartment. But again, because of social distancing, banks are now accepting drive-by appraisals or desktop appraisals, where the appraiser can do the report remotely, doesn't need to interact with anybody physically, which is a great win. Yeah. The other thing I would say is a huge win is that, you know, really there are some parts that haven't changed. for example, conforming loans. Like there's two major types of loans we see in New York City, right? You've got the conforming loans, loans that conform to Fannie Mae and Freddie Mac guidelines, and then you have the jumbo loans, the portfolio loans that are bank specific. For the most part, conforming loans haven't changed, right? Fannie and Freddie are still lending. You could still get a loan of up to upwards of $510,000 with only 3% down. Sorry, 3% down, and they'll do a drive-by appraisal. You can get a loan upwards of $765,000 in the New York City area with as little as 5% down. Now, again, this pertains to single occupancy only. So co-ops, which would be challenging because of the board and building requirements, but co-ops, condos, and single family homes, again, you could potentially put as little as 3% down or 5% down, depending on the loan amount. And that's with the Fannie Mae, Freddie Mac programs.
Fantastic.
Yeah.
We saw a trend back in I started in this business 2004. So we saw this trend occur, similar trend in 2008 when we had the mortgage meltdown. And it really was Fannie Mae, Freddie Mac, FHA that did approximately 85% of the lending after that crisis to help bring us out of that crisis. And I think we'll see the same thing. Well, they're the ones that are going to help pull us out of this crisis. Now, here's the bad news is that for loans that don't fall in that bucket, right? So you need bigger loans like New York City. Obviously, we have typically a lot of jumbo loans, meaning loans bigger than, $511,000 or bigger than $765,000. Those lenders, those are not government-sponsored loans. Those are bank-specific, and those lenders are pulling back. I'll give you an example. A couple lenders as an example. Bank of America now requiring for a loan over $1 million, between $1 million and $2 million, requiring 25% down. Wells Fargo used to have a 10% program. You could borrow up to 1.25 million with only 10% down. They've also pulled back and now are requiring 20% down. And as depending on what happens with the market, with potential future declines in the market, I think you'll see jumbo lenders pull back even more, requiring higher credit scores, larger down payments. And there's also programs that are disappearing. A lot of times, mortgage brokers have these special programs like bank statement programs to help self-employed people qualify. You have foreign national programs or special niche banks that do that, and they're pulling back as well, or requiring larger down payments or higher credit scores. So that's the bad news, but the good news, it's still possible to do business.
Yeah, that's important.
Fantastic. So what are some tips for a potential home buyer to get approved for a mortgage right now in this market?
Yeah, absolutely. So I like to think about things in bullet points, and so there are four pieces to the puzzle, right, when it comes to getting financing to buy an apartment or a home here in the city. One is your credit and credit history, which I'll chat about more shortly. Your income in relationship to that future housing expense, along with any other debt you might be carrying. Third thing is your assets. Obviously, you need money for three things, right? Down payment, closing costs, and then a lot of buildings, a lot of co-ops are going to require reserves, or a lot of banks, a lot of jumbo lenders will require reserves as well. That's that emergency money. We want to know after the down payment, after the closing cost, that you've got some money left over. And the fourth piece of the puzzle, and this is why you and I have job security, is the collateral, right? New York City has complicated collateral, co-ops and condos, right? And from a banking perspective, banks only like to lend in buildings that are financially sound, financially strong, right? Good financials, proper insurance, etc. So when I'm talking to a potential future home buyer, a couple things obviously that they can do, is one important thing that takes time is getting their credit ready to qualify for a mortgage. And so a couple tips. First of all, for folks that have come abroad that don't have, maybe they're working here, they've moved here from Europe, and in Europe, a lot of times they don't like credit, they don't like to use credit. It's a different credit model. Here in the US, we like people to have a history of using credit before we lend them, hundreds of thousands of dollars. Additionally, you might have folks that have just graduated from college, and maybe they were authorized users on their parents' account. They didn't actually pay the bill, or they weren't responsible. So it's important to establish credit as quickly as possible, as soon as somebody gets here, whether they've graduated from college or moved here from abroad. And the key is that they get at least a minimum of 3 accounts as soon as possible. Again, it could be a credit card, car loan, student loans, a car lease, anything like that, as quickly as possible, but where they're personally responsible, right? Not that they're not an authorized user, but they are the one that applied. They're responsible for paying for the bill.
So credit.
Another, yeah, exactly. And some people might say, well, what do I do? I have no credit and I'm having trouble getting approved. There are things called like secure credit cards where you might put a deposit with a bank for $500 and they'll give you a credit card where you can charge $500, but they'll also start reporting that to your credit, to the credit bureau, so that you can start to establish your credit. So that's the minimum, 3 accounts as soon as possible. Another 2 tips, as soon as I'm helping somebody to do a pre-approval, I'm making 2 recommendations. One is that when it comes to their credit, they keep status quo, right? Now's not the time to close any old accounts. Those old accounts are actually helping your credit. And also is not the time to go to the Gap when you see a leather jacket on sale and they offer you 10% if you open a new credit card with them. Don't do it, right? That's gonna hurt your credit. So maintain what you have. That's number 1. Obviously, continue to pay everything on time, avoid collections, etc. And the second thing I think is the most misunderstood thing about credit is credit card usage, right? Everyone knows it's good not to overdo it with credit cards, and people often like to use credit cards because, hey, we get free cashback rewards. They charge everything. Some people charge their rent, right, to their credit cards, and knowing that they're going to pay it in full at the end of the month. And so they think, hey, I've got perfect credit, right? I pay everything on time. I pay off all my credit cards. That's not how you're graded. You are actually, your FICO score, your credit score is calculated based on what shows up on your credit card statement. So for example, again, you charge everything you can, a stick of gum, a bag of groceries, your rent, you charge it to your credit card, and you get that statement that says $6,000, knowing you're going to pay it in full and let's say your credit limit is $10,000. Well, you're using $60,000 of your available credit, and that's bad. That's not good. So here's the trick. And again, normally you don't have to be crazy about this, but if you're thinking you're going to borrow hundreds of thousands of dollars and you're thinking you're going to apply to buy a co-op, the co-op board is going to see your credit report too. So you're going to want to get your credit ready for things like that, for the mortgage, for the co-op board. So here's the thing to do is you need to pay your credit cards off, keep the balances lower before the statement is generated. And the ideal is to not use less than 30%. And if you want to be an A+ student, to really use less than 10%. So how do you do that? Well, you can't use the auto pay. That doesn't work. That doesn't solve the issue. You need to pay the balance off before the statement is generated. So what I do personally, I have my credit card app on my phone, and I'll just go on there. First of all, I don't like seeing a balance. And hopefully we're spending only money we have. So as soon as I see a balance, I'll go and pay it off. Now, I'm not suggesting you do that, but monitor your credit maybe on a weekly basis, or if you make a large purchase, maybe pay it off as soon as it shows up as a balance on your credit card. Don't wait for the statement. So those are some quick tips. What you think?
Wonderful.
Fantastic. We really appreciate it.
My pleasure.
Yeah, especially for first home buyers, right? That they are lost. They have so many questions. So it's great.
Exactly. So I know you have a meeting to go to. I don't want to take up too much of your time. So guys in the audience, if you want to contact Stephan, you reach out to us. We'll put you in touch with him. He's a great educator, a great teacher. He's a really, really font of information because the co-op condo New York City market is complicated. So you want a professional who's been in the business for a long time, who's patient, who can really walk you through this process.
Very responsive.
This is the man to talk to right here.
Yes, exactly.
Thank you both. You're very sweet.
Thank you so much. Hats off to you.
Hats off to you.
Thanks for joining our show today.
Stay safe.
Have a great day.
Bye-bye.
You
Thanks,
too.
Stephan.
Bye-bye. Thank you both.
Thank you.